Welcome back to Market Day Report. I'm Scott Schulte, otherwise known as the Cow Guy. Thanks for joining us. If you're just joining us, thanks for being, staying tuned all day if you've been so inclined. We're trying to get you these markets. There's been a lot happening, especially after last week, or especially after last Friday. We've got COVID worries to worry about. We still have inflation. We've got a lot of things on the docket here, and we haven't even begun to talk about Mother Nature, right? So let's bring that corn board up and let's see where we are at with the corn. How about Dees is down 6.5 cents at 5.80 1/4. March off 9 1/4 cents at 5.82 1/2. 2 cents off the lows there. So still kind of acting weak in that corn market. Soybeans, how about soybeans? We were up overnight, but boy, oh boy, we've kind of rolled over with disappointing equities trade. January is off 8 cents at 12.44 3/4. About 1.5 off the lows. March off 7.5 cents at 12.55 1/2. Moving right along, he says, to Chicago wheat. What's happening there? 18 cents lower in that D's contract. We've got 807 1/2 last. That's about 2.5 cents off the lows. March 19 cents lower at 821 1/4. About 2.5 cents off the lows there too. All right. How about hard red wheat in Kansas City? 14 3/4 cents lower in Dees. 850 1/4. Got 16 cents lower in March at 853. Both of those are about 3 cents off the lows, so hanging in there. How about spring wheat in Minneapolis? 11 cents lower at 1028 1/2 in that D's contract. That's about a penny off the lows. March 8 cents lower at 1040 1/2, which is about 3.5 cents off the lows. All right, let's move to cotton real quick. Cotton has been fighting. It's kind of given up a little bit. 46 cents lower in that March contract at 111.32. Let's bring in Todd Horowitz from Bubba Trading. Todd's an old pit trading friend of mine. He's been around. He knows what's going on. He's seen a lot of those last Fridays himself. What do you think? What do you think about today's action, considering what we've seen happening in the outside markets?
Well, I mean, the Omicron virus has been solved. They've got the cure. It took 3 days this time to get a cure for this. I mean, the markets are a little ugly. They're a little heavy, but they've been really strong, Scott. And I'm not concerned. I mean, I'm still long. I think we're going higher. You're going to get some pullbacks here. We've had a pretty solid rally, and there's no question you're going to get some pullbacks. And I think there is a lot of unease in equities, which the first place they attack usually when they're in trouble is they go after things they have profits in. And certainly anybody who's been buying grains for a while has some pretty good profits. So I'm sure there's some profit taking in there.
Yeah, and we saw a pretty good shakeout. I mean, it gapped lower on Friday. I mean, I sat here all day long watching the action, and as tough as it was at times, we did make some decent comebacks. And I think that one of the bigger stories on Friday for me was to see how well corn did. I mean, we finished up 7 cents on the day. What do you think?
I think it's great. Like I said, I'm very comfortable with a long position here right now. And I would tell you, listen, I'll always tell you straight what my position is. And I don't see any reason to be concerned. 7 cents, remember, the higher the price gets, the bigger the sell-offs could become because it's still the same percentage move. So I'm not worried at all. I mean, I wasn't happy that soybeans turned overnight, from 7 higher to lower. But overall, we still have come, remember, we were just begging to hold on to 11.80 in soybeans. So it's been a pretty good move up, and certainly some two-way action is no surprise here, and I would still be a buyer and be a buyer of dips here, not a seller of rallies.
Right. You've said it best. I'll put it the way I can, is that, if you're in it for the long term, you can't react in the short term, right? I mean, that's just the way it goes. All right. Appreciate it. Stay right there. We're going to go away, pay some bills, come back and talk livestock with Todd Bubba Horowitz after these messages. Welcome back to Market Day Report. I'm Scott Schulte. Thank you for staying with us if you've been with us all day. It's been worth it being with us all day. We've had some great commentary, but also these markets are very interesting considering what happened on Friday, that weird day in between Thanksgiving and the weekend. And, everybody asks why are we open on that day, and the answer is this. It's not Thanksgiving around the world. It just so happens to be Thanksgiving in this country, but we have a lot of global players. So let's see what these global players are doing right now. How about live cattle? The cattle market's kind of rolled over on us here just as of late. Dees is down 67 cents at 137.42. Fab's off $1.47 at 139.72. How about feeders? They've rolled over too. Feeders have taken a little bit of a downturn. Jan off $1.30 at 165.85. $1.25 lower in March at 166.72. And let's take a look at lean hogs. Lean hogs are a little bit better. The East contract's down a tick, 2 cents, 73.17, but Feb is up 57 cents at 81.16 as you got the curve. All the way to June, you see $1.17 higher on the board in June. All right, let's bring back in Todd Bubba Horowitz. Todd, what do you think about these? What do you think about the recent downturn in the cattle market?
Well, I think cattle looks fine too as well, Scott. I mean, we're getting some selling pressure here. I'm not thrilled. You know, this morning when I was looking and trading, they were higher, and I thought they looked pretty solid. And suddenly we have turned lower, which is, it could be some profit taking. It could be some fear money getting out. Again, as people always take their profits first, which is always a mistake. You get rid of the dogs, you keep the good stuff. But that's not how the way markets work because emotions always play. But I think we're in good shape. And I think going back to what you said earlier, it's about the long haul and the long term. And I don't see a reason to be nervous yet about what's going on here. We haven't had any real dramatic sell-offs yet, and I think the same goes for hogs as well. I think the entire complex, proteins and grains, look terrific, and I would have no problem, and of course I have no problem because I am along all of them.
And if you believe in inflation, which I still am a believer in inflation, I don't think that's going away anytime soon. We might get a little bit of short-term relief from lower crude oil prices, but I don't know if that's going to be the case going forward. These products are also going to be in the crosshairs of folks that want to hedge inflation, and those are going to be buyers, natural buyers. Wouldn't you agree?
I agree 100%. And crude oil suddenly is up $4 today, back, so it's recovered 40% of its losses. The strategic reserve draining, that's only a temporary. That's like putting a Band-Aid on a tourniquet, which you like to use, and it's not going to do anything. It's silly. If you really want to cut inflation, go back to fracking and shale producing, and we'll have no inflation, and we can get on with it, and we can continue to grow and get ourselves in the right direction.
Yep, you just said it all right there, and I'm going to leave it at that. Thank you very much. That's Todd Bubba Horowitz from Bubba Trading. He's coming to us from Chicago. Thanks for being on the show today. I'll bring it back to Nashville and throw it over to Tammy.